Hi there. So welcome back to Manifested Online Classes. So in this session, I want us to look on an illustration question regarding accounting for leases by the lessee. And recall what you have said in our previous session that the lessee is supposed to recognize two items in his books of account, the right of use asset and the lease what? Liability. So I want us to look on an illustration question here. We look on how we determine those two items, right of use asset and the lease liability. So the question reads, or the illustration reads, on 1st of January 2019, Breakwood Limited entered into a contract to lease an item of plant and equipment from a supplier for 3 years period. The terms of the lease were that Breakwood Limited was to pay shillings 500,000 each year, with the payment commencing on 31st of December 2019. Initial direct costs incurred in the lease amounted to 30,000 and were paid by Breakwood Limited. The plant and equipment had a remaining economic useful life for 5 years at the inception date of the lease. The lease contract did not contain any purchase option for the lessee. And then you're told Breakwood Limited can borrow at an interest rate of 10% per annum. So we are required to analyze the accounting treatment of the above lease transaction from the inception for 3 years period of and there is what? A contract. So basically, what you're told in this particular illustration here is that the company which is called Breakwood Limited leased an asset. So what that means that Breakwood Limited is the lessee, is the company which has been conferred, is the company which has been given the right to do what? To use an asset for a given period of time. And I think in this case, we are told that this company was given the right to use the asset for a period of 3 years, from 1st of January 2019 to or basically up to the end of the 3rd year. So what you have said is that once a company leases an asset, at the inception date of the lease or when the lease commences, such a company should recognize two items. Something we have referred to as the lease liability, and number two, what we have referred to as the right of what? Use asset. So therefore, let's determine those two items. And we are going to start by determining the lease liability. The lease liability. And that is on 1st of January 2019. 1st January 2019, this is the inception date of the lease. Inception date of the lease. And you have said that this is equal to the present value of the lease or the minimum lease rentals, minimum lease rentals, present value of minimum lease rentals not paid at inception date of the lease, not paid at inception date of the lease, inception date of the lease. So for us to be able to compute this, we have to understand what you're told in that particular question there, that this particular lease commenced on 1st of January 2019. So 1st January 2019, this is the inception date of the lease. It is the date when the lease commenced. So, and you're told the lease is for 3 years. The first year will end on 31st of December 2019, 31st of December 2020, and 31st of December 2021. 31st of December 2021. And we are told that the rent which is payable, the minimum lease rentals which is payable, is an amount of 500,000, and we are told that the first rent will be paid on 31st of December 2019. What that means is that this minimum lease rentals is payable at the end of each year. Payable at the end of each what? Year. It means that the other minimum lease rentals or the other rent will be paid at the end of year 2, and the other one will be paid at the end of what? Year 3. At the end of what? Year 3. So therefore, how do we determine the lease liability? We determine the lease liability by getting the present value of the minimum lease rentals not paid at the inception date of the lease. So in our case here, the minimum lease rentals which has not been paid on this date include this amount, that, and what? That. So therefore, there is liability is equal to the minimum lease rentals, which is an amount of 500,000, and basically this is like an annuity, is a series of payment. We need to multiply that with the present value, interest factor of annuity, at which rate? At the rate which you are given there. In the last paragraph of that question, you are told that this company, which is Breakwood Limited, can borrow at the rate of 10%. That's what we are going to use for discounting purpose, and basically for period of 3 years. So we multiply that with the present value interest factor of annuity at 10% forward for 3 years. So therefore, we have 500,000. So we need to get the formula for getting this, where we take 1 minus 1 plus R. Our R in this case is 10%. So this will be 1.1 raised to power n. Our n is what? 3. And then we divide that with what? With R, which is 0. What? 0.1. So basically this is a formula which we use in terms of getting the present value, interest factor of annuity. So we take what? 1 minus 1 plus what? Plus R raised to power negative n, and then we divide that with what? With R. So that is now what we are using what? Here. So therefore, let's get that lease liability at the inception date of what? At the inception date of the lease. So let first of all we compute this, and we take 1.1, we raise that to negative 3, and then we deduct that from 1, and then we divide that with 0.1, and then times 500,000, and that will give us a figure of what? That will give us a figure of shillings 426 to the nearest what? Whole number. So this is now the lease liability at the inception date of the lease. And then what I've said is that once we have determined this particular lease liability, what we need to do is to amortize it. To amortize a liability is to gradually write off the liability, because now this represent the amount of money which now the lessee, that is Breakwood Limited, is expected to pay over the lease what? Term. So therefore, what we need to do before we determine the right of use asset, let's amortize this particular what? Liability. So we amortize that liability by preparing something called the lease amortization what? Schedule. So we need to prepare something called a lease amortization schedule. A lease amortization schedule. Lease amortization schedule. So how do we prepare this schedule? We always start with the years which are ending on 31st of December. So and basically we know that the first year was supposed to end on 31st of December 2019, and then the other column here will be for the lease liability. Lease liability at the start of the year, that is balance brought down. Then the next column which follows here always depend with when the rent is payable. If the rent is payable at the start, the next column should be for the rent paid. If the rent is payable at the end of the year, the next column here should be for the interest. So mean that because our rent here is payable at the end of the year, our next column here should be for the interest. And basically this interest we computed based on the rate of 10%, based on the rate of 10%. And then the other column here should be for the lease rentals paid, or in other terms you can just refer to this as cash paid. Cash what? Cash paid, which now represent the rent paid at the end of each year. And finally we have the lease liability. The lease liability at the end of what? At the end of the year. So that's how we prepare our amortization schedule. Our amortization schedule. So in our case, we have said the first year ended on 31st December 2019. The other year ended on 31st of December 2020. And the other year ended on 31st of December 2021. So what is the lease liability at the start of year one? So the lease liability at the start of year one is what you have determined there. The amount of 43, 426. So then we compute the interest, which will be 10% of this. 10% of this will be 43 or 124,000, 343. And then we know that at the end of year one, how much cash, or basically how much rent was paid. So at the end of year one, the rent which was paid was 500,000. Was 500 what? Thousand. So how do we get then the lease liability at the end of year one? To get the lease liability at the end of year one, we take the lease liability at the start of the year plus the interest, and then we less cash which was paid. So that will give us the lease liability at the end of what? At the end of year one. So we take 1243, 426 plus 124, 343, and then we less 500,000. We less 500,000, and that will give us now a lease liability of what? Will give us a lease liability here of 867, 769. So we can confirm whether that is correct. We take 1,243,426 plus the interest 124, 343 minus what was paid, which is 500,000. 500,000. Yes, that will give us 867, 769, which now will be the lease liability at the end of year one, and equally that now will be the lease liability at the start of year two. So we compute interest being 10% of that, which will give us 86, 777, and then the cash which was still paid in that year was how much? Was 500,000. So let's work out the lease liability at the end of year two. So we have 867, 769 plus the interest, which is 86, 777 minus 500,000, and that will give us a figure of 454, 546, and then that now will be the lease liability at the start of year 3, 454, 546, and then we get 10% of that, which now will be our interest, which will be 455, 455, and then we less now what was paid. So what was paid at the end of year 3 is what we have there. So and then we get now the lease liability at the end of year 3. So which will be 454, 546 plus 45, 455 minus 500,000. And basically that now will give us what? 0. It will give us what? 0. So that's how we prepare what we refer as the lease amortization schedule. The lease amortization schedule, of which the objective, the purpose of preparing that lease amortization schedule is for us to be able to amortize this particular word, lease liability. And what now the lessee should account for in his financial statement is that this particular lease, or basically this interest which we have here, this one is accounted for as an expense in the income statement of the lessee. Is an expense in the income statement of the lessee, and then this particular lease liability is or is basically a liability. Is what? Is a liability in the statement of financial possession. This one is recognized as a liability, in the statement of financial possession of who? In the statement of financial possession of the lessee. So then next what we need to do is to determine the other item. And the other item we need to determine here is what? Is the right of use asset. The right of use what? Asset. Right of use asset. Right of use assets. And we need to determine the right of use asset at the inception date of the lease, which is the 1st of January 2019. 1st of January 2019. Remember, we have said that we determine fees by adding three items. One, the lease liability at the inception date of the lease. Remember, you have already determined the lease liability at the inception date of the lease. To that, we add any payment which was made before or at the commencement date of the lease. Plus, also we add what we refer as any initial direct cost associated with the lease. So, therefore, what we do here, we take the lease liability at the inception date of the lease, that is on 1st of January 2019, and we already have that figure here, which is 43 426, and then to this we add payment made at or before the commencement date of the lease. Commencement date of the lease. So if you check on this particular schedule which we have here, you'll be able to see that we don't have any payment which was made here. No payment which was made before or at the commencement date of the lease. But if this this minimum lease rentals was payable at the start of the year, then the amount now which would have been paid at the inception date of the lease, or basically before the commencement date of the lease, would be now the rent which was paid at the start of or at the commencement date of the lease. So therefore, in our case here, we don't have any payment which was made before or at the commencement date of the lease. And then to this we add the initial direct cost. So this is any cost which was incurred at the commencement date of the lease. If you go back to the question here, to our illustration, in paragraph number 2, we are told the initial direct costs incurred on the lease amounted to 30,000 and were paid for by Breakwood Limited. So in our case here, we have some initial direct costs which were incurred on the commencement date of the lease, and which amounted to how much? Which amounted to 30,000. So we add it there. So whatever you get here, we refer to that as the right of use asset. The right of use what? Asset. So let's add these two figures, which will give us 1273 426. 426. That is now the right of use asset at the commencement date of the lease. Then what you have said is that this particular right of use asset then should be depreciated at the shorter of two periods. At the shorter of two what? Periods. So this one should be depreciated. Right of use asset should be depreciated at shorter law of number one, the lease term. So in this case, when talk about the lease term, we are talking of the period of the lease. So in our case, we know this lease is for what? For 3 years, or Roman 2, economic life of the asset. Economic life of asset. So are we given the economic life of the asset in this particular question here? Yes. So we are given the economic life of the asset in paragraph 2, sentence 2, where we are told the plant and equipment had a remaining economic useful life of how many years? 5 years. So we are given the economic life of the asset, which are 5 years. So therefore, what we need to do is to depreciate now this particular right of use asset at the shorter of those two periods. So which period is shorter? The period which is shorter is the lease term, which are 3 years. So therefore, to determine the depreciation per annum, per annum of this right of use asset, we take the amount for initial recognition, which is 1273 426, and then we divide that with 3 years. That will give us now the amount to be recognized as depreciation in each of those 3 years. So 1273 426 divide that with 3, and that will give us annual depreciation of 475. So that is now the amount to be recognized as what? As an expense, or basically as depreciation in each of those 3 years, in each of those 3 years. And then this particular right of use asset, in each year, it should be depreciated at that particular amount, at that particular what? Amount. So therefore, that is basically what the examiner here was requiring. You illustrate how this particular lease will be accounted for that particular period of 3 years. So what you are supposed to do there is to remember that the lessee, the company which has leased this particular asset, will recognize 2 items: the lease liability, and we have looked on how we determine that, and then which you have said should be amortized over the term of the lease. And 2, the lessee, that is Breakwood Limited, will also recognize what you have referred to as the right of what? Use asset, and then that right of use asset should be depreciated over the term of the lease. So basically, at the shorter of those 2 what? Period, the lease term and also what? The economic life of the asset. So that what is required as far as that particular illustration is concerned. So that brings us now to the end of how the leases are accounted for by the lessee. So we take a short break, and then once we come back, I want us to look on how we or how the leases are accounted for by the owner of the asset, or basically the person who is called the lessor. So we take a short break, and then see you in the next class.